news and a lot of volumes as well. Greenlam Industries, however, the first management on the show today, the laminate major reported a good revenue, 18% jump out there. Laminates and plywoods business saw improvement. Panels were the ones that was a new addition, or that is what added to their overall revenues as well as against the same time last quarter. Saurabh Mittal, who's the MD and CEO, joins in now. Saurabh, thanks a lot for joining in. Congratulations. The second quarter, despite it being a challenging one from a demand environment, has done well for you. 18% revenue growth, EBITDA growth of 28% as well. So the question, first half, 15% revenue. The last time you joined us, you said 18 to 20% revenue growth for FY26 with 11 to 12% blended EBITDA margins. You're pretty much there when it comes to the EBITDA margins. But the second half, do you think you can make up for your overall target of 18 to 20% revenue growth for the year?
Yeah, so I think we should be able to make up. And last year, we had a weak H2, and I think with the way Q2 has progressed for us, so I think we are on with that 18-20%, kind of a top line number for FY26.
Saurabh, hi. Thanks very much for joining in. 18 to 20% growth is what you are sticking with for the entire year. But just give us a sense in terms of what that's predicated on for the second half. If you had to break up the volume mix, the pricing mix, and the segment growth that you're anticipating, what's going to be driving the growth?
So, like if you see in Q2, we grew across all parts of our business. The laminates, the core business, is exceptionally well in terms of volume, value, gross margins, EBITDA margins. The plywood and allied category also did well, with plywood and door doing very well. The chipboard business gained decent traction. We grew about 50% in Q2 versus Q1, and Q1 was our first quarter. So I think going ahead, I think each part of our business, we think will grow, both domestic and international. There could be some gaps here and there, but by and large, we expect growth across every part of our business.
Sure. Saurabh, you're expecting growth across all your businesses. I just want to understand specifically for the panel side of the business, your utilization, I believe chipboard utilization is at 36%. Where do you see that headed now? And what would be the peak revenues that one could see coming in from this business as well? In terms of contribution, growth, what can we watch out for?
Right. So Q1, like I said, was a first quarter for that business. And I think progressively we'll keep winning more business, and which will help us increase utilization, increase revenues. We had said earlier, year 3, we expect full utilization. At a full utilization, revenues would be something like a 725 to 750 crores. So that's on the peak revenue. I think moving ahead, we'll keep getting better from where we were in Q2. Can't give an exact number on every quarter, but I think this will keep inching up as we move ahead.
All right, this will keep inching up as you move ahead. Could you give us a sense on the break-even for your veneer business and the plywood business? You had earlier indicated that it's fairly near. So I just wanted to understand on that factor, and exports as well. What proportion are exports at right now, and where do they stand going forward?
Sure. So in the plywood and allied category, we have plywoods, decorative veneer, flooring, and doors. The veneer business and flooring business have already achieved the break-even in Q2. Like we said last time, we're close to it. The ply business obviously is a larger investment, and there too we're winning market share in the premium plywood category, and sales are going up. And you can see in Q2 we did about, I think, 45-50% of growth. So in the plywood and the door business also, door break-even is just at the corner, and ply, I think we will have to still do a little bit more numbers to get to a break-even on the ply business. On the exports, again, Q2 was very good for us in exports. We grew about 10-12%. Revenues were good, and Q1 was a bit weak for us. And exports is about 45% of the total revenue of the company, and about 50-51% of the laminates business. So I think exports too, we see decent traction in many markets. And in fact, we've announced expansion for laminates, in this quarter, and we're adding 2 lines of laminates, which will be about 2 million sheets and boards, which will come up by Q4 of FY27. So exports too, I think, should do well overall. Some markets there could be some challenges, but by and large, we expect decent growth on the export front too.
Okay, so you're expecting maybe a 10 to 12% growth in terms of the export market to continue?
Yeah, we could say that, yes.
Okay. Is that going to be the key driver going forward? If you had to compare it to the domestic business, where are you sort of pushing your energies in terms of incremental growth and capex?
So on the growth, the laminates business is like 50% domestic and 50% international. All the wood business, which is plywood, chipboard, veneer, flooring, door, these are largely domestic businesses. So I think as we move ahead, we expect growth in both domestic and international markets. The recent investments have been largely done on the wood category. So we expect the domestic mix to improve as a percent of the overall revenue mix, but will grow in both the geographies. We have a very strong foothold in both international markets and domestic markets. And I think, we'll keep growing in both the places. And the capacities we built in laminates are of global size and scale. So I think clearly, that's a core strength of the company, and we expect growth.
What would that mix be going forward then? If you expect domestic to pick up in terms of the mix there, what is the mix that you're envisaging? Maybe FY27 end, what would we watch out for?
So my sense would be 60% domestic, 40% exports as a company. Okay. But if you look at laminates, maybe still remain in a similar range of 50% each.
Okay.
Right. And
about 20% to here there.
how much more room do you have for working capital? Because earlier it was 65, 70 days, closer to 70 days. Now it's come down sub 50 days, 47. Right. As we move forward with more plants coming in, more products, more businesses, do you think this is the best that we have in terms of NWC, or at some point you will see further improvement here as well?
So actually, I'm not so sure. We have improved net working capital cycle to 47. This is the best we've done.
Yeah.
Having said that, we still have the chipboard business where the working capital cycle is still not as efficient as we want it to be.
Exactly.
And likewise in the ply business. And we've seen, if you see Q2 of last year versus Q2 of this year, overall revenues went up by about 130 crores. And we actually could reduce net working capital cycle in value and obviously in days also. So I think it depends on how things go. But my sense is if we keep improving revenues, because our collection periods in the market is one of the best, I think net working capital cycle can still improve a bit, but one has to see how this goes actually.
Take that point. Thank you so much for joining in and giving us your outlook on the business going forward. 18 to 20% revenue growth with 11 to 12% EBITDA margin, something you're on course to do. Second half looks a lot better. There are some triggers coming in from new plants, etc. that will play out too. But working capital days, something that we will monitor as we go along, because you've already seen a fair amount of improvement. Take a short break, come back, get you more on the markets. We'll focus on lens cart and transformers and rectifiers. Stay with us.